Hello everyone, and welcome to our 2011 Fall Regional Meeting and our discussion of the so-called fair tax. And joining us for this segment of the program is Jim Moody. And Jim is a governmental relations specialist and former budget director in the Ashcroft administration. And Jim, thanks a lot for being with us.
Good to be here.
Jim, what exactly does the fair tax do?
Well, I don't like the term fair tax because I don't think it's fair. But basically what they're going to do is eliminate the individual income tax and replace it with a consumption tax capped at 7%. In theory, the consumption tax broadens the base, but in reality, the petitions don't tell you anything about what's going to be taxed. They simply tell you what's not going to be taxed and what the caps are.
And Jim, I understand this proposal would actually create a shortfall in state revenue. How much of a shortfall are we talking about?
Well, simply by recalculating the rates and then taxing food at 5.5%, the mathematical shortfall there is $3.2 billion. Now, they would tell you that they're going to broaden the base, but they've exempted most of the large buckets of where there might be a significant amount of money, such as utilities. And so I think there's going to be a very dramatic shortfall, at least a couple $1 billion.
So what impact would a $2 to $3 billion shortfall in state revenue have on something like elementary and secondary education?
Well, when you look at where the state spends its money, a lot of it goes to education. Nearly half of the general fund goes to education. And then some of it goes to the Medicaid program, which frankly probably can't be cut. And then other areas that get money would include corrections, health, mental health. But if the base here is about $7.3, $7.4 billion. And so if you're short $2 billion, you have to cut where the money goes. And a lot of it goes to education. So I think elementary and secondary education and higher education definitely would be on the cut list.
So Jim, I understand there's also a limit on local sales taxes. Is that right?
There is. There's a 7% limit on state sales tax, a 3% limit on local sales tax.
So in order to raise the local sales tax above the 3% limit, there would have to be an extraordinary vote, as I understand it.
The local tax is capped at 3%. And, I live in Jefferson City, and when I go to the store there, I'm paying currently about 3.5% local tax. So they're going to cap the local tax at 3% and require to go above the 3% an extraordinary vote. So if citizens can no longer choose by simple majority to increase their sales tax, on general elections it would require a 4/7 vote. On non-general elections it would require a 2/3 vote. And again, I would go back to the idea that this is a jobs plan. How does that fit into a jobs plan? It just doesn't. This is a limit government initiative.
Jim, the supporters of this idea cite Tennessee as an example of a state without a state income tax, and they also point to that state as an example of high job growth. Can we really compare Missouri to Tennessee?
They point to Tennessee, and Tennessee balances their budget with enormous business taxes that Missouri does not have, and they would lead you to believe that, for example, Tennessee has no income tax. Well, that's not true. Tennessee has an income tax on interest and dividends. They would lead you to believe that Tennessee has no corporate income tax, and that's definitely not true. They have a corporate income tax, but it's called a franchise tax. I'm sorry, an excise tax. And if you look at under the excise tax and see how it's imposed, it's 6.5% of corporate profits. It's a corporate income tax. If you have a professional license in Tennessee, any type of professional license, you pay $400 a year for the privilege of having a license in Tennessee. So they've got all of these taxes outside of the sales tax that help them to balance our budget. And if you compare Missouri to Tennessee, the business-related taxes are about $2.4 billion. After we repealed the corporate franchise tax this year, in Missouri it's less than $500 million. So Tennessee has about $2 billion of business taxes that Missouri does not have. That's how they get by with the sales tax. Well, guess what? We're going to cap our sales tax, and we don't have these business taxes. And so you can just do the math Tennessee, their sales tax generates $6.4 billion. Well, we need $7.9 billion. But within their sales tax, they have what's called the single article sales tax for the value of products between $1,600 and $3,200. If you were to buy a car, for example, their sales tax is not 7%. It's 9.75% for between $1,600 and $3,200. And so they've got these anomalies. And in Tennessee, the motor vehicle sales tax, which is huge, goes into their general fund. In Missouri, it goes to MoDOT. So to compare apples and apples, we would need to take that out of Tennessee's number, and that's about $650 million. And so, I think if you look at Tennessee and compare it to what Missouri needs, take out the motor vehicle sales tax and the single article sales tax, their revenues are probably about $5.5 billion. And again, in Missouri, we need 7.9. So, even if you look at Tennessee, there's a huge budget gap that would exist if this proposal was adopted.
So the sales tax is generally regarded as a regressive tax, meaning that it would have a greater impact on lower income people than higher income people. How does the proposal account for that?
They do not. They do not. In earlier petitions, there was this idea of a prebate, which is a payment to make sure that the tax did not apply to the basic necessities of life, such things as food. And there is no prebate here. So this tax would be extremely regressive.
So Jim, what are some examples of some items that would be subject to the state sales tax under this proposal that are not subject to the tax right now?
Food, well, again, they don't explicitly tell you what is going to be taxed. They tell you what's not going to be taxed. But such things as food, healthcare, they try and tell you that it's not going to be taxed, yet in the exemptions it says it's exempt if it's not recouped from another source. Well, what's recouped from another source? That's insurance. And so I believe, and the state budget office believes, that healthcare that is paid for by insurance would be taxed. And I think that's kind of crazy, but in fact, if you were to go to the emergency room and you had a deductible, I think the way that it reads, your deductible is not taxed, but the recoupment from the insurance company is taxed. And then other items such as automotive care, in-home care for the elderly, if you have someone clean your home, for example, that would be a taxable transaction. But really, the petitions say very little about what is going to be taxed. It's all about what's not going to be taxed. Because in the end, the reason they have the cap there is because they know it's politically unpopular if they go above the cap. Okay, above 10% is very, very unpopular. And they don't need to talk about what's going to be taxed because they have the cap, and frankly, they don't care if it generates enough revenue. I really think this is a starved government petition drive that they're doing here. And that's their goal. And if that's your goal, you simply do the subterfuge of putting caps in, not talking about what you're going to tax, and then casting it as a jobs program when this has nothing to do with jobs. This is shoot and pray. And in fact, the Show Me Institute, which is funded by Mr. Sinkfield, there's a paper on the Show Me Institute that says if you adopt consumption taxes, the initial economic impact is negative because as rates go up, consumption goes down. And this is interesting. The statement was, but things even out after a generation. And so do you really want to put Missouri's future on such shaky economic premises?
We have something in our state called Proposition C, the 1 cent sales tax for education. What happens to Prop C under this proposal?
Prop C disappears. The new consumption tax is required to segregate essentially what are current receipts into an account for Prop C lookalike fund. But there's no provision for growth. And so I think Prop C would stay at the current level, no growth in the future.
Now, these are constitutional amendments. Why is that important?
Well, because if there are a constitutional amendment that's adopted, in order to change anything, you have to adopt yet another constitutional amendment. So the cap would be in the Constitution, both the state and the local caps, and all the exemptions are in the Constitution. And frankly, that is stuff that should not be in our Constitution. We should not be writing ironclad tax policy into our Constitution. That's not the way it's done.
Jim, let's talk about the politics of this a little bit if we could. Who's behind this effort, and are they well financed?
Well, there's a group called Let Voters Decide that's funded by Mr. Singfield. And for example, in 2010, they put an initiative requiring referendums on the earnings taxes in St. Louis and Kansas City. And he spent $11 million on that activity out of his own pocket. And so he has pretty much unlimited resources and would seem to be indicating that he's going to spend at least that much and probably a lot more on this activity. They have begun spending money in Southwest Missouri on both radio and TV, and the information that we have is they have in fact started to gather signatures in Southwest Missouri. So this is going to be a very well-funded activity on their part, and the people on our side who are working for that, working against it, we will have some money, but we're going to be outspent by a large amount. But having said that, I think we've got the right message here.
So Jim, right now, what should our board members and superintendents be doing about this issue? Should they be talking about the harm it might do to people in their communities?
They really should. They really should, because while the proponents would try and portray this as a jobs program, there's no jobs plan here. In sports, the analogy would be shoot and pray. And this is really an initiative to limit government. And as part of that, part of the other side's activities have also been somewhat anti-education or trying to change education. And frankly, I think if education gets hurt in the process here, they just view that as collateral damage. And school board members and educators need to know that because there is no way this improves education. It can only hurt education.
All right, Jim Moody, thank you very much for being with us here at our fall regional meeting.
Thank you, Brent.